News drives markets, and every day, Montel's experienced reporters are on top of the stories that shape European market developments. Can you afford to miss out? Go to montelnews.com for the latest price-driving stories and a free trial.
Hello listeners and welcome to the Montel Weekly Podcast. Bring you energy matters in an informal setting. We are returning after a short summer break, so for all those at work, we hope you enjoyed your holiday, and to those listeners on holiday, have a very enjoyable break. Today we're talking gas and we're discussing current market dynamics, and joining me, Richard Sverrisson, is a regular on the pod, I'd like to say. Wayne Bryan, warm welcome to you.
Hey, good afternoon. Nice to be back here, actually. It's been a while.
It's great to have you here, Wayne, as ever. So we're talking gas, basically, today. Now, we're seeing a little bit of a rally in current prices. What's behind this, Wayne?
I think as we just discussed when I came in here, I think what we've seen, we were in a nice position the last couple of months, range-bound prices, everything was very comfortable, supply was there, demand wasn't too great. And then we saw the rise in Henry Hub over recent days. That's helped lift, the US molecule is important and it's proven now because that's helped lift futures across Europe. And also the Asian prices ticked up a bit as well. Also, we've had a bit of concern around Velki. Velki nominations dropped from the stable 1100 to around 700, partly offset by flows on Malno have been lifted slightly. And now there's the backhaul's been set up and there's some reverse nominations now at Velki because that's only been available since March. So that spooked the market a little bit. We've got some concerns around nuclear. We mentioned French nuclear, temperatures are rising, water levels obviously in flows are going to be impacted, which means they might have to shut off more reactors over the coming days. German gas for power burn is above the 4-year average, and actually lignite usage is also below the 4-year average. So we've seen what the low price environment has done in terms of spurring some additional demand. Even though overall power demand is down, gas for power demand is up. So it's been a bit of a cocktail of things. And I was saying this yesterday, let's not forget, the price is still cheap. If you compare it to a year ago, this is still cheap gas. And once we saw the price start to rise, we then start seeing momentum build. People don't want to get caught short, so then start buying. That fed into the rally we've seen over recent days. I still think around the €7 a megawatt hour will prove to be difficult to get above technically if things remain the same. Any new fundamental changes to the supply-demand mix might see it push above. But we still see the actual further upside potential is kind of limited. And I haven't even mentioned maintenance. We've got quite a heavy maintenance schedule over the next 4 weeks or so. So yeah, a little bit of bullishness, but for me overall, we're still in a good position, and it'd be interesting to see what happens at the end of next month with storages, etc. Because we're only, less than 7 weeks away from winter.
Wayne, excellent summary there, as ever. But what I'd like to go into each of those points, really, or some of those, maybe not everyone, but I think starting with the US Henry Hub prices, what's driving those up?
I think you've seen a decline in feed gas, and obviously cooling demand has ramped up with really above average temperatures. I think productivity, if you look at the rig count as well, that can give you some idea of gas and associated gas production. So yeah, I think that's just driven it up. And again, that was also very cheap. And I think it needed to do that. And we might see now some US exports. I think I was reading something yesterday, I forget the name of the company, Tellurian, excuse me if I pronounced that wrong. They're talking about offering it at $350 for exports, when really we generally look at around $650. So LNG developments, again, are going to drive the price like it has already, because we all expected this big LNG supply glut into this summer. And then the US cancellations sort of got rid of that excess we expected. But looking at September, there's rumours around 25 to 30 cargoes have been cancelled, maybe even less, which is a decrease from what we saw in July and August.
And you mentioned Velki. That's the Slovakian, that's the hub, or basically the entry-exit point on the Slovakian-Ukrainian border, isn't it? What's happening there?
Well, normally Velki used to flow into Europe at around 1,100 a day, and it's been very stable. I write about it a lot of days when I'm on the morning report, and it's been stable at 1,100, but what we saw from the 1st of August, nominations fell to 700. Like I said, slightly offset by a slight increase in Malno flows, but the reverse flow situation now at Velki has enabled them to nominate back. So we saw quite elevated nominations on the reverse side for Velki, which will probably feed into Ukrainian storage, which is now, I think, close to 22 levels now. So, that's the situation there. It took the market by surprise. And also there was some Budin's maintenance that was shifted across that sort of facilitated this. So while it was a sort of concern, I think it will recover over the coming months. And it's just a temporary blip. And I don't see any long-term issues there.
Malmo, for those listeners who are unaware, is the Polish entry-exit hub, isn't it? I mean, we're still awash with gas, really, in Europe, aren't we, Wayne? So I'm just wondering, but at the same time, supply does seem to be tightening. Would that be a fair assumption?
A little bit, yeah. We've seen a drop in Norwegian flows. Norwegian flows have been quite erratic when it comes to Langled. And we've seen definitely some price-activated sort of flows. And it's sort of in line with what Equinor said, I think, a few weeks ago, where they said they're going to prioritise price over volume. So that gives you a little indication into the insight from there. So, but like you said, supply is still reasonably ample, but we've got a lot of maintenance coming and throw in the slowdown in LNG, throw in increased demand from the power sector, and it's created a little bit of tightness. But let's just not forget where the storage levels are. And there's obviously going to be quite a few injections into storage over the coming weeks as well, which is another supporting factor.
So you mentioned the maintenance on the Slovakian hub, or entry-exit point, I should say. We've seen some coming up in Norway, coming up in Kolsnes, Kårstø and Troll. I mean, what
Don't hold your breath for their maintenances, because it's constant. They're changing them, revising them, whether it's COVID impacts or whether it's actually commercial decisions. Like I said, when I write my morning report recently, I'm checking Gasco page constantly, because for some there's 7 or 8 revisions per maintenance, so they're constantly shifting. Even in the UK, we've seen a similar situation with Barrow, which keeps extending its maintenance period. So maintenance has been a supportive and a weakness. I mean, it depends on when it falls, but now we've seen this whole bunch of maintenances planned mid to the end of August, early September, both in the UK and in Norway. So again, wait till they happen. Because we're still not sure whether they're going to get moved again, as we've been seeing of late.
Yeah, absolutely. So in some sense, that maintenance will prevent prices falling back to below 3, won't it? I mean,
dependent on any other factors that caveats as always. But it should do.
I mean, you can't really. I mean, if prices fell to below 3, I think around €2.23 in mid-May, wasn't it? I mean, we can't see. Do you see a return to those prices, Wayne? I
get asked this question quite a lot, and again, I'm not too sure at the moment. There is a lot of talk, and there is a potential, if supply-demand fundamentals continue in this vein as we get closer to the start of the winter season, and storages, which are already high, I think total EU is around 85%, then we could see a problem. And it depends on the dynamics. There's a lot of moving parts in this market at the moment, and it all depends on where we are in the next 4 to 5 weeks. And then I'll give you a more clearer assessment. But I think if we did get back to that stage again, I think you might see, I wouldn't say collective, but you might see some producer turndowns, the likes of Russia, the likes of Norway, the likes of Algeria. You might see some production turndowns just to keep prices buoyed. I've seen people alluding to the fact we could see negative pricing, but I'm still not too sure about that. But again, I'll wait and see where we are in the next 4 to 5 weeks, and that'll give a clear indication.
Because it seems, as we mentioned at the start, that we're on a bit of a rally. How long that will continue, obviously, is you're more the expert than me, but we'll see how long that lasts, Wayne. But what about Russian flows? I mean, we've seen them, for example, Turkey, they're massively down as Turkey looks more to LNG. Is this a long-term trend, do you think, Wayne?
I wouldn't say it's a long-term trend, but I think if you look at the strategy over recent months in terms of the overall strategy, it's been ever-shifting. Like we saw normally when Velki goes under its maintenance, like it did a few weeks ago, normally we'd see an increase maybe through other routes. This time we saw withdrawals from storages, whether it was Bergamine, Haida. There's a couple of storages, they were using that to utilise. Also the ESP sales have been a big increase year on year. So that it seems like the strategy is changing, and they're using the various different points to indeed, as you said, flows dropping here, increasing there. So I wouldn't say conundrum, but it's giving a fascinating insight into their strategy if you really take a deep dive.
Interesting, yeah. And you mentioned storage. What's the outlook here for the winter? Will they be full as we go into the winter season, do you think? Or what?
Looking at where it is now and looking at what we assess storages to be close to fullness by maybe even early September. But again, it's dependent on many things. However, storages are elevated. We were in a similar position last year. The only thing that kept us propped up last year was the Ukrainian deal concerns. Otherwise, we'd have been in the same situation. So I see some parallels. And I haven't even mentioned the word COVID yet, which is great. I was mentioning that a lot recently.
After 10 minutes, Wayne, that's pretty good.
I'm pretty
good
impressed.
going. Yeah.
I've not mentioned COVID. That's also a factor. It's having different factors. You look at LDZ, for example, in the UK, and other remote working. If you're staying at home working, you're using more energy, occupancy rates, the houses are higher. So there's a lot of different things. And with what's going on now, with these second wave concerns, I think today Germany said that anyone coming from certain parts of Belgium will have to isolate as a UK citizen. I can't go to Spain. These sort of things as well will start to have an impact. And we see a lot of staycations across Europe this year, which again is going to have an impact. So COVID is there. It's still, as we know now, the second wave concerns are really rising. So that, again, we'll start looking at that moving forward as well, if we start to see. I think we're moving away from more national lockdowns and more regional, like we've seen in Aberdeen, like we've seen in different parts of the world. I think in Amsterdam now, they're saying that you have to wear masks out in public. Again, that dissuades people from going out. And so, yeah, the COVID will still be there. And we'll be looking at that in our seasonal outlook for the coming winter, for sure.
Absolutely. I mean, we'll return to that, I think, because obviously that's a key factor which will impact demand, certainly in the months and maybe even the year ahead. But if we return to supply, and on the LNG side, you mentioned the US producers. What about the Qataris? What's going on here? What's their strategy?
It's interesting because the Qataris came out not too long ago saying they're not affected by COVID. They're going to continue pushing forward with their plans. However, we have noted a slight slowdown over the recent weeks in terms of send-outs. But they can absorb more of this low-cost environment than others. And you see they've already secured a deal. I think they're actually going to be building 100 ships, and they've secured around 67% of global shipbuilding capacity over 4 years. So that gives you an idea of what they think. And exports to the UK, again, can continue. What we've seen of late is Qatari cargoes of last resort, as we call them, have been coming into Southhook because obviously they have an agreement. If they can't find a more profitable destination, they send it to Southhook, and Southhook receipts are a little bit higher last month. And we may get a couple of cargoes this month as well. I think there's 2 en route, and we may see a couple of more. Like I mentioned earlier, there's a few that have left Ras Laffan without a firm destination, and we may see some of them coming into the UK. Similar with Europe, for a slight slowdown in LNG send-out, but I think we've seen a couple of new additions this morning. So it's a risk on for me for the downside if LNG surprises. And like I alluded to earlier, company were talking about US exports at 350. So let's wait and see on that front.
Absolutely. So that could cap any of the gains.
It could, but also it could also, on the flip side, start to slow down even more. But I personally don't see that. Asia's a key player in this. Asian demand is key to sort of this whole balance. If Asia can soak up some extra supply, great. If not, then how is Europe going to absorb it? Put it into storage? I mean, storages are already close to fullness. So like I said, there's so many moving parts at the moment. You can't really fully ascertain what's going to happen until we start getting a little bit closer, but we've all got ideas, and speaking to people in the market, everyone's of a kind of similar opinion. There might be a few outliers out there, but most people have a similar opinion on where we are at the moment.
And back to US LNG, I mean, you mentioned the cancellations that we saw in July and certainly at the start of August. What's the outlook here for the coming months?
You need to look at the feed gas. Any recovery in feed gas should spill into some more increase in exports, at the moment, if you look at the rig count, it's still really low, I think in late 180s. But you do have these DUC wells drilled but uncompleted. There's quite a lot of them that can still produce gas as well. So I think you need to look at the US feed gas flows into the LNG export plants to get a better idea on potential exports. And obviously the price.
If we go into demand, you mentioned Asian demand. Is that picking up at the moment?
A little bit, but again, we're seeing there's different dynamics in that market. South Korea has been taking a bit less LNG. Looking at India, their demand isn't where it is, and they're having some real problems with COVID now, which is not a surprise for a country that size. It's looking at South Asia and some of the excess demand from there, like the Vietnamese, Thai, etc. They're looking now to really switch to more gas-fired production. So if that demand starts ticking up a bit, then maybe that will help with the market. But also looking at China, US-China relations now, geopolitically, are ratcheting up. And I saw that China have taken a lot less LNG than they originally said they would under the agreement that was a few months ago. So that's a concern. So looking at on the geopolitics, any ramp up in rhetoric between these two countries, and I believe it's getting quite strong now. I think the US are going to Taiwan, which is again creating problems. So that's also key as well with China.
And what impact would that have on the gas market then? If there's a trade war, if they're taking less, obviously that has to go somewhere else, doesn't it?
Exactly.
Yeah. And where would it go? Europe?
Could be, but can we take it?
Yeah, exactly.
We don't know where we're going to be in the next 4 weeks, 5 weeks in terms of storage levels. But yeah, can we absorb it? We don't know yet.
Yeah, no, exactly. And that's another aspect to this short-lived rally. It may just be that
peter out.
Exactly.
Indeed.
I mean, that's something that clearly we need to keep a clear eye on what's happening on the US-China relations.
Agreed.
Not just for gas, but generally in the commodities picture.
Correct.
But if we look at Europe, what's the outlook here? I mean, is there the power market? Is that absorbing some of the gas? Where's the demand for gas in Europe?
Well, as I mentioned, German power demand's above the 4-year average that you guys did a story on the other day. So that's rising. Lignite hard coal usage is down because of these cheap low gas prices. However, what we might see is a switch. If we start to see a recovery in gas prices, which we are now, that might then dissuade excessive switching. So I think that, to me, again, is something that I look at over the coming weeks. After we get through this hot spell, I think demand will start to fall. But again, prices will play its part.
And obviously one of the wild cards here is what's happening in France with the nuclear availability, isn't it? I mean, what's your analysis here, Wayne?
Every year,
every autumn,
even
isn't it?
when I was working in my previous role, trading, it's always something I took a look at. And I was having a look at it the other day, and now we've got the rise in temperatures, which, as you know, affect the temperatures of the river and then the flow, which means they might have to take more reactors offline. And we already look at where we are now. It's below the 3 or 4 year average for French nuclear. The forecast looks a bit better because EDF obviously revised up their end of year output, but it remains to be seen to me. I wouldn't hedge my bets on that happening at the moment. So that is always a concern. Similar story in the UK. UK nuclear output's been very low, and obviously Belgium has its own problems as well. So nuclear again will be key. If we see French nuclear output close to what EDF proposed revised a few weeks ago, revising it higher, then perhaps it won't play a bigger part. But experience tells me that French nuclears will always cause some volatility as we move towards and once we get into the winter season. But even more so the next week or two because of this. I mean, London's going to be 36, similar temperatures across Europe. And we saw what happened last time with the French nukes. That happened. So again, something to keep an eye on.
Absolutely, could be another sort of wild card.
Yes.
But how about sort of wind? Is that will that as the growth in wind across Europe will that reduce some of the gas demand?
Yeah, it's a good point. I mean, UK especially has been quite strong recently. I think yesterday we saw at one point, I think it was 33% of the mix was wind, about 17% solar, and then some biomass. So it was taking us over 50%. And obviously Germany very strong with wind. And a lot of countries now aiming towards this net zero have a lot of projects on the go. I'm not sure how COVID's going to impact these projects in terms of personnel, etc. But looking forward, yes, especially for me, the solar. Solar's growing massively. And tomorrow, I think you're going to see a very good day for UK solar. I mean, cloud cover's high today, but tomorrow we're going to have blue skies and 35-degree temperatures. So yeah, again, this is a growing area and will offset some of that gas demand from the power sector, and it will only increase over the coming years.
Absolutely. So that's maybe a little bit of a bleak outlook there for the gas demand picture, isn't it? With the growing renewables.
But I wouldn't call it bleak,
but not so rosy anyway. Or certainly pressurizing gas demand.
Correct.
I think that would be a way to put it. But maybe it's good for the planet, but not so much so positive for the gas
Indeed.
demand. You mentioned geopolitics as well, Wayne, and I'm just wondering, are you closely following what's happening with Nord Stream 2? And
yes, I mean, I presented for you guys in Dusseldorf last year, and I mentioned Nord Stream 2, and I at the time said I'd still think it will go ahead. I still think it will, but there's a lot of pressure building from America at the moment. But I think Europe wants it, like Germany definitely wants it. So I think it will happen, but I mean, who knows now? I mean, I think Putin said by the end of Q1 21, and please don't quote me on that. By the end of Q1 21, it should be operational. So we shall see. I think I read something yesterday or this morning. saying one shipbuilder's distanced themselves from it, so they won't be doing this last part of the pipeline. I think it's 97% complete.
Yeah, it's almost there.
It's almost there. Yeah. I mean, you've got to think of the amount of investment been put into this. It's going to happen. But the US are pretty strong, but I'm no legal expert, so I don't know the full how much they can impact it. Obviously they have, because people have pulled out certain partners, but I still think it will happen. But if you ask me when, I don't know now. I mean, there's a lot more concerns around that, but it will still happen.
And I think also a lot will hinge on what happens in the presidential election in the US.
Of course. A lot's going to depend on that, not just in our markets, but in related markets too.
Finally, Wayne, just to bring us back to the C word, the COVID word, we're seeing sort of infections rise in certain parts of Europe. This is obviously quite a large concern. What are your expectations for a potential second wave and how that could impact the gas market?
We're already seeing it. Yeah. Not potential. If you look at, I was reading this morning the news, and it wasn't painting a pretty picture. I think record rises in France. Daily averages on a weekly averages are now rising. And the UK was the same. Last night they were talking about the rise in the last couple of weeks. Yeah, it's a big concern. Australia now, 6-week lockdown. I don't need to mention the US because we all know what's happening there. Yes, even Vietnam, which has got real draconian measures for lockdown. I think they recorded another 50 cases yesterday, which for them is quite a big increase because the first wave didn't really affect them. They shut the country down quite quickly, and people observed all the rules that were put in place. So when you see outbreaks in places like that, and then you've got the World Health Organization sending a team to South Africa, which is recording, again, record rates. For me, it's a bit, I always thought this second wave would arrive. As soon as you start seeing restrictions eased, there has to be some rise. And again, I think until we see a vaccine, we're going to be in this situation for a while. I saw the American doctor, he said that we won't have this under control till at least the end of next year, maybe further, maybe it's with us forever. We still don't know so much about this. And I keep harping back to, we don't know what's happening. But again, it's true with COVID. No one knows where we're going to be with COVID. Do we need 1 dose? Do we need 2 doses?
Yeah.
If so, 14 billion doses. I mean, and also you got to look at the concerns economically for countries who don't want to force themselves back into this nationwide lockdowns that we all went through over the last few months because of the damage economically. But at some point, you're going to have to draw the line, And so, COVID is
in terms of recovery as well,
it doesn't paint a pretty picture if you look at the economics and how much we're going to be, as taxpayers, going to be paying for this for a very long time. And the jobless counts are rising. I think the tourism sector, they're looking at over 1 million job losses, if not more. So it's not. I'd like to paint a good picture towards the end of this, but I just hope we get a vaccine as soon as possible and we can get it out there. But it's not going to be for a while.
Yeah. I mean, on a positive note, Wayne, it's been great to have you here in our London office, face to face. Although we are social distancing, listeners, be assured. And we've talked certainly virtually and on the phone, Zoom in and everything. But it's a great privilege to have you here, Wayne. Especially seeing as you've taken this is actually the start of your annual leave, your summer holiday.
Yeah, it's the first. You got me at a good time. It's the first day of my leave. I think after today, I think I'll be switching off in terms of markets for at least a couple of weeks, bar the odd weekly check, of course, to keep abreast of what's happening. So it caught me on a good day. So looking forward to having a bit of a relaxing break actually, and I'm intrigued to see where we are when I come back.
Exactly. Yeah, we'll follow up when you come back for sure, Wayne. But thanks so much for coming in. It's been a very interesting discussion, and it's always good to hear your views on what's happening in the market.
You're welcome, and look forward to the next time.
So listeners, that's all for this week. We're back again next week. In the meantime, catch up with all the latest news on Montel Online, follow us on LinkedIn, Twitter, and subscribe to the Montel Weekly Podcast on Apple Podcasts, Spotify, or wherever you get your podcasts. Thank you and goodbye.